Welcome to Charts Today. My name's David Linton, and today's edition for Tuesday, the 7th of September, comes to you from London. And quite a lot of red on the screen this morning for energy, so we'll come back and look at that at the end. But looking at major markets, the US was closed yesterday for the holiday, so quite interesting. We'll take a look at how markets are faring. The dollar just starting to edge higher, maybe finding support around this July low. But continuing just to edge higher. This is the weekly, daily and 60-minute chart. Below the cloud is bearish, above is bullish. So here we are still long-term bearish, but medium-term bullish, and of course waiting for that short-term to change. The euro is just starting to weaken in line with that increasing dollar strength. And against the yen, we're sitting around the 110 level, so not much change there. Sterling sitting at 138.14, just dipping slightly, nearly got to 139 yesterday morning, but just falling away again. And against the euro, sterling sitting at 116.38, so just sinking a bit lower there. Bitcoin holding on to the $50,000 mark. $83,000 is still the long-term target there, bullish on all three time frames. The US markets were closed yesterday, so it's up to the futures today. We're seeing the Nasdaq future and the S&P futures up slightly, so the market looks like it will open slightly higher. The VIX volatility is up a little as well, so not enough to worry about the fear index. We are still bearish on the fear index, meaning the market is not fearful. Looking at the FTSE future, we're down 0.25% this morning. The cash market in Germany down slightly, and the CAC Quarante up slightly. Japan is up 1%, looking very strong after that breakout. And breaking to new highs there, so Japan looking strong. The Hang Seng is up 0.8%, and China up 1.5%, so Asian markets breaking to new highs. That's really quite convincing. We haven't yet taken out the high that we saw earlier this year, but with all the targets we're seeing here on the long-term charts, it's looking like we will. The S&P 500 index is up 0.33%. That's looking. Sorry, the Sensex in India is looking strong. That 53% target looking ever more doable, and the Aussie market little changed. We'll take a look at the energy mix in a minute. Just looking at some of the soft commodities, wheat is up 0.5%. That's still got lots of long-term upside targets, so that's looking pretty strong. Corn up 0.2%. Gold falling back a little bit, down 0.5% to 18.14, but still just holding on to its short-term bullish trend and finding support on the weekly cloud. Silver, much the same there as well, and platinum and palladium just a little bit lower. US 10-year yield sitting at 1.36%, so we're seeing quite a move there, and all we need to do is just move a little bit higher and we activate these upside targets. That's looking quite significant there, that 1.75% target about to be activated. So bond yields back to looking more bullish there, and we need to just get above that 140 level on the cloud to really look like we're going higher. Taking a look at the energy mix now, we've got Brent crude. That's actually up this morning, Brent, up 0.3%, but still looking vulnerable here to the lower high, lower low scenario. WTI is actually down at 0.5%, so that's significant. And then if you look at US nat gas sitting steady at 467, down 1% this morning, but still looking pretty bullish on the charts. We do have a downside target here to 4.5%, but for the moment, these upside targets on the 60-minute chart are ruling. Coal, no signs of a deterioration here, sitting at 121.90, still looking ever more bullish, and emissions sitting down this morning, but again the charts are up. We do have a couple of downside targets here just yet to activate. Looking at MBP, in the UK, we're down 2% this morning, and TTF also lower. We have got some downside targets not yet activated on MBP. TTF, we do have one that is activated, so we may just see gas pausing for breath. Taking a look at German power, we're sitting at 0.99%. In fact, I was looking at some German power charts yesterday, just looking at the optimal stops to be using for German power, and this came in at 2% long, 1% short. So that was the key to that system, and it's just showing here the equity curve just looking a little bit better than the actual power market. But should we get a fall in power prices that's dramatic, this is what will protect us. So it's quite interesting to see that there working back over quite a long period of time. So the 2% stop 1% has kept you in. That's it for today. Until tomorrow, happy charting. See you then.